Streamex Corp. Streamex, the company, we or S, is developing digital infrastructure for the tokenization and exchange of real-world assets, RWAs, initially focused on physical gold and gold-linked financial products. Following our acquisition of Streamex Exchange Corporation, Streamex Exchange, on May 28, 2025, we expanded beyond our historical focus as a medical device technology company. We conduct our tokenized gold program through Streamex Limited, a Cayman Islands special purpose entity that we consolidate as a variable interest entity, VIE, because we are its primary beneficiary. Streamex Limited issues GLDY tokens, which represent non-voting participating equity interests, designed to provide holders with economic exposure to physical gold bullion and gold-denominated leasing returns. During the 6 months ended June 30, 2026, we launched the GLDY token program, acquired physical gold bullion to back the program, earned our first gold lease income, and subscribed for a $2,000 interest in MetaLayer Digital Fund 1, MetaLayer, funded in USDC digital assets, and we held $6,001 of digital assets, principally USDC, at June 30, 2026. We also completed a January 2026 underwritten public offering and settled our secured convertible debentures in February 2026, eliminating all outstanding debt. We operate as a single operating and recordable segment. Gold lease income was $146 for the 3 months ended June 30, 2026, compared with no income in the prior year period, which preceded the commencement of our gold leasing activities. We earn this income by deploying our own physical gold into a third-party leasing program in exchange for a stated in-kind return. The arrangement is outside the scope of ASC 606 and is recognized over the lease term on an effective yield basis, with a $54 gold-denominated receivable recorded at June 30, 2026, for yield earned but not yet settled in gold. Substantially all of our gold lease income and the entire related receivable is with a single counterparty. A loss of or adverse change in that relationship would eliminate or materially reduce our only current source of income. General and administrative expense decreased by $5,975, or 30.2%, to $13,836 for the 3 months ended June 30, 2026, from $19,811 for the prior year period. The decrease was driven primarily by a $5,003 decrease in stock-based compensation to $7,117 from $12,120, a 41.3% decrease, and a $3,573 decrease in consulting and platform development costs, partially offset by increases in marketing and investor relations cost of $1,234, personnel and board-related costs of $704, insurance cost of $498, legal and regulatory cost of $295, and accounting and audit cost of $234, and by decreases in public company readiness costs of $247 and corporate infrastructure costs of $226. Depreciation and amortization expense increased $917, or 165.5%, to $1,471 for the 3 months ended June 30, 2026, from $554 for the prior year period. The increase resulted primarily from a full quarter of amortization of the trade name, developed technology, legal and compliance framework, and other identifiable intangible assets recognized in the May 2025 Streamex Exchange acquisition. Total other income, net, was $105 for the 3 months ended June 30, 2026, compared with total other expense, net, of $3 for the prior year period. The current period amount consisted principally of $200 of other income, net, primarily foreign currency and other individually immaterial items, and a $14 gain from changes in the fair value of marketable securities, partially offset by a $106 realized loss on marketable securities and $3 of net interest expense. Other income, net, is stated after a $172 unrealized loss on our investment in MetaLayer, which we measure using the fund's reported net asset value per share as a practical expedient for fair value. We recognized an income tax benefit of $505 for the 3 months ended June 30, 2026, compared with none in the prior year period. The benefit resulted primarily from the reversal of a portion of the deferred tax liability associated with amortization of the identifiable intangible assets recognized in the Streamex exchange acquisition, which are held through our Canadian operations. Gold lease income was $146 for the 6 months ended June 30th, 2026, compared with no income in the prior year period. The 3-month and 6-month amounts are the same because approximately $12 of gross in-kind gold lease income earned in the first quarter of 2026, comprising $11 of in-kind lease yield and $1 of contractual revenue share, but not recorded in our previously issued interim financial statements for that period, was recognized in the second quarter of 2026 as an out-of-period correction. Excluding that first quarter catch-up, gold lease income earned in the second quarter of 2026 was approximately $134. General and administrative expense increased $25,316, or 111.2%, to $48,089 for the 6 months ended June 30th, 2026, from $22,773 for the prior year period. The increase was driven principally by an $18,293 increase in stock-based compensation to $32,487 from $14,194, a 128.9% increase, together with increases in marketing and investor relations, $3,491, personnel and board-related costs, $2,995, insurance, $1,114, and combined legal, regulatory, accounting, and audit costs, $1,594, partially offset by a $2,117 decrease in consulting and platform development costs, and smaller decreases in public company, $45, and corporate infrastructure, $134 costs. Depreciation and amortization expense increased $2,386, or 413.5%, to $2,963 for the 6 months ended June 30th, 2026, from $577 for the prior year period, reflecting a full 6 months of amortization of the acquired identifiable intangible assets, compared with approximately 1 month in the prior year period following the May 28, 2025 acquisition date. Total other expense, net, was $11,409 for the 6 months ended June 30th, 2026, compared with total other income, net, of $181 for the prior year period, an unfavorable change of $11,590. The change was driven principally by $12,198 of net interest expense, substantially all of which, approximately $203 of contractual interest and approximately $11,979 of non-cash amortization of debt discounts and issuance costs, related to the secured convertible debentures settled in February 2026, and by a $3,057 loss on extinguishment of those debentures. These items were partially offset by a $2,938 realized gain on the February 2026 sale of previously pledged gold bullion, a $497 gain from the change in fair value of the debentures embedded derivative before its derecognition on settlement, and a $377 net realized gain on marketable securities, including the gain realized on the sale of our investment in Empress Royalty Corp. During the 6 months ended June 30th, 2026, the company received approximately $1,000 of USDC digital assets in connection with the transfer of an ownership interest in Streamex Limited to a non-controlling interest holder. During the second quarter of 2026, the company engaged an advisor to assist in evaluating monetization, licensing, sale, or other strategic alternatives for its pure EPTM patent portfolio. As of June 30th, 2026, the company had not received any definitive offer, letter of intent, indication of interest, or term sheet, and had not committed to any transaction. Net cash used in operating activities was $21,918 for the 6 months ended June 30th, 2026, an increase of $19,525 from $2,393 for the prior year period, reflecting the expanded scale of operations following the Streamex exchange acquisition and the launch of the GLDY program. Net cash provided by investing activities was $9,163 for the 6 months ended June 30th, 2026, compared with $366 for the prior year period. The current period inflow was driven by $26,410 of proceeds from the February 2026 sale of previously pledged gold bullion and $21,003 of proceeds from sales of marketable securities, partially offset by $23,900 of purchases of marketable securities and $14,375 of purchases of gold held at cost. Net cash used in financing activities was $1,882 for the 6 months ended June 30th, 2026, compared with net cash provided by financing activities of $4,700 for the prior year period. Current period activity reflected $37,184 of net proceeds from the January 2026 underwritten public offering and $350 of proceeds from the issuance of equity interests in Streamex Limited to non-controlling interest holders, more than offset by $38,500 paid to settle the secured convertible debentures. In November 2025, a former advisor filed a notice of civil claim in the Supreme Court of British Columbia against the company, its wholly owned subsidiary Streamex Exchange Corporation, and certain current officers and directors. The claim alleges, among other things, breach of contract, unjust enrichment, and civil conspiracy in connection with alleged agreements relating to equity interests in Streamex Exchange Corporation prior to the company's acquisition of that entity. The plaintiff seeks, among other relief, specific performance, equitable compensation, and damages. The company disputes the claims and intends to defend the matter vigorously.